It is no longer the 2008 financial crisis. It is the 2023 crisis. It has been 15 years since we had a recession. I am not surprised we are having a recession today. Economist and gold bug Peter Schiff has warned of a much more severe recession, and inflation will get worse than the Federal Reserve recognizes. In this video, I will share what made Peter Schiff believe that the American economy was in a severe recession and what you must do to prepare for the worst. The 2023 financial crash has started.
So this whole collapse is coming, and if we want to do anything about it, we have to recognize, right, what the fault is, and then we have to start dealing with the real cause of the problem.
In the wake of the failures of SVB and Signature Bank, Peter said it was the beginning of the following depression. But virtually nobody in the mainstream is calling it a crisis. Peter compared the situation way back in 2008 with today. In a nutshell, the 2008 recession was about debt people ran up during a bubble and the inability of borrowers to pay when the air came out. This is what is happening now. It is a banking crisis, and banks are financials. I think most people are reluctant to call it a financial crisis because they do not want to evoke the memories of 2008 and make any comparisons. They do not wish to acknowledge that. Peter said the big event that banks cannot handle is the utmost economic downturn coupled with a rise in inflation. So, if we have high inflation and a recession at the same time, banks are going to fail. He feared that the worst was yet to come. In his old tweet, Schiff took an ironic stance on what investors and Congress should have done instead of depending on the central bank in the wake of the banking crisis. I warned on Twitter precisely about what the Fed failed to test for almost 3 years ago. So instead of relying on the Fed, all Congress or investors had to do was follow me on Twitter, and nothing that happened to SVB or Signature Bank would have come as a surprise, Schiff tweeted on March 29, 2023. As the economy with the aftermath of the banking crisis, he believes that the solution of Fed printing new money and taking on more debt is a ticking time bomb. He even warns that these actions will only lead to higher consumer prices and inflation. The real cause of inflation? The American government and the Federal Reserve act in concert with one another, where the government spends money it does not have, and then the Fed prints money for the government to spend. That is why we have inflation, Peter explained. It was not the first time Peter Schiff had voiced his concerns about the American economy. At the end of last year, he said that inflation was about to worsen and the dollar would be covering one of its worst years ever. In October 2022, he said the dollar would crash and America will have defaulted on its debt. Peter also predicted that the action of the Fed could lead to market crashes, a massive financial crisis, and a severe recession.
Now, the government can lie about inflation for a while. They can hide it behind these doctored up CPI numbers that are so, mechanized, or they're so manipulated. Not, there's a conspiracy, but the formulas that they use to calculate prices going up are flawed. They're deliberately engineered to get a low number. I mean, that's why they're there.
You have to think of inflation not as a monetary phenomenon, and not as the effect that inflation is going to have on prices, and not consumer prices, and asset prices, but you also have to think about inflation in its most basic form, which is taxation. Inflation is a tax. It is mainly what it boils down to, and you have to understand this because governments have two ways of paying for their expenditures. The most honest way is through current taxation. Now that can be unpopular for the people who are paying the taxes. The impact of inflation on us. When companies and workers start worrying about inflation, their fears can lead them to expect higher inflation results. As a result, workers may ask for higher wages to offset the increased cost of living. But it is a self-fulfilling prophecy. Their fears can worsen the problem. To afford higher wages for their workers, companies have to increase their prices. When companies think raw materials cost more, they also increase their prices to maintain their profit margins. Combined, that means inflation expectations can cause inflation rates to rise. Over time, inflation can cause a dollar to be worth less than it used to be, lowering all purchasers' purchasing power. As a result, you need to earn more money to maintain the same standard of living. For example, let us say that you earn $5,000 monthly in June 2010. To maintain that same level of buying power and compensate for inflation, you would need to make $6,000 today. The banking crisis will get worse. Peter explained that with inflation daily devaluing money, they would want to get it out of banks because banks would not be able to pay an interest rate high enough to compensate for the loss. Once people want to get their money out of banks, money is not there. So the only way people can get their money is if Fed prints it. But if the Fed continues to print more dollars, it will destroy even more value.
And the next time the banks fail, if the Fed is doing the right thing and raising rates, that means not only do the banks fail, not only do the bondholders lose money, but the depositors lose money. Because if the government is having trouble paying its own debts, how's it going to bail out the FDIC? Where's it going to get that money? So there are tremendous losses. All we're doing now, all of our policy is designed to postpone the day of reckoning beyond the next election.
From 2020 to 2021, the interest rates hold at 0%, encouraging the economy to continue growing and spending. It allowed people to borrow a lot of money. And as you would expect, that money flowed back into the banking system, which would be a sensible move for people to make. However, when a bank takes your deposit, they do not let it sit in a vault. Instead, they lend and invest it with the expectation of growing that money and giving some of it back to you as a reward for keeping your money with the bank. In this case, though, American banks had so much money and interest rates were so low that a large chunk of their deposits went into buying low-yield treasuries, which plummeted in value once the Fed began rapidly raising their rates. Now, in a stock market, this would not be that big of a deal since technically the bank still has access to their money. The American economy has been hit with a string of bank failures, and these bank failures have exposed some more significant problems at the core of the American financial system. Emergency measures by the Fed and Treasury were required to stop several ongoing banks runs that threats the insolvency of dozens of institutions. In its simplest form, people put money in a bank called deposits, and banks pay an interest rate on those deposits. Banks buy securities like treasury bonds or make loans such as real estate, auto, and credit card loans. If the bank earns more interest on the deposits and loans, it will pay interest. Then they make money and are profitable. The combination of an economic downturn and rising inflation could trigger a banking crisis, leading to a vital financial disaster. Banks are in far worse shape than they were in 2008, especially the too big to fail banks that we bailed out, and are now much more significant than they were back then, and even more insolvent. So as a result of what the Fed has done after 2008 financial crisis, this new financial crisis that got started will be much worse, Peter said. Peter Schiff warns the American dollar will crash. The world loves dollars. Whenever there is an issue, most people flock to the dollar as a haven. But America has problems of its own. Emerging markets just killed it. They were up 400% or 500%. In the first decade of this century, the S&P goes down in value. And of course, the real value of stocks was down even more, if you measured them in foreign currencies or if you measured them in the price of gold. Well, the dollar will be weaker now than it was then. Metal, gold, and item prices will be much higher in this decade than they were then. And I think the relative gains investors will enjoy through investing in overseas markets will be even higher than the high gains they had enjoyed. Peter Schiff shared his outlook on the American dollar in a podcast titled "When This Sucker's Rally Ends, the Dollar Will Crash," was published on April 8, 2023. He explained that the United States had vital problems that would lead to the crash. Now that the dollar is weakening, the future trade deficit will widen, causing the dollar to fall further.
But it's not. It's college tuitions are going up. Prices are going up. The only place that they're not going up is in the CPI. I wish I could buy the CPI, but unfortunately I have to buy real things. And they're getting more expensive, but at some point they're going to get a lot more expensive, and the government's not going to be able to pretend it doesn't exist, and the dollar's just going to collapse.
What were the best investments of the 1970s when we had stagflation? This time, it is going to be worse stagnation and worse inflation. What happened? The Deutsche Mark tripled, the yen tripled, and the Swiss franc tripled in commodity prices as the dollar collapsed. The only reason that the dollar stopped falling in 1980 was that we had Ronald Reagan coming in and Paul Volcker allowing short-term interest rates to rise to 20%. That is how broke we are today compared to 1980. Can gold stocks make you richer in recession? When you own a bar of gold, you are storing the future use of gold as a metal. People need gold. They will always need gold, and jewelers need gold. Gold is the most valuable metal on the planet. It does not decay, but it is to preserve your wealth. You will not get rich owning physical gold, but you will avoid going broke. But if you want to get rich or get 3 times richer, own gold stocks. I believe it has enormous potential. Some of these stocks can go up 10 times, 20 times, or 50 times. So I think a lot of money is in gold stocks. Of course, there is more risk in gold stocks. I mean, no pain, no gain, right? You cannot get the highest returns unless you are willing to take high risks. But I think the upside potential is enormous compared to the downside risk. So, if you are a risk taker, I think these risks make a lot of sense. Can you build wealth during a recession? When the pandemic hit, most used to believe that everyone went bankrupt, but they did not. Some made millions. Most also assumed that everyone closed their businesses during these times, but certainly some did start new ones. It all depends on your mindset. There will always be moments of prosperity for some individuals and times of depression or recession for others. Building your business can be one of the most lucrative and profitable opportunities.
This is why recessions can be a good thing, is because bad companies can completely go out of business. New companies and people have room to grow in those recessions the same way that new companies or new trees can grow the same way that a new company can.
You have to be creative. People still have money to spend during recessions, and people still have jobs during recessions, even during the Great Depression. Most people have a job, but are scared to spend because of what is happening in the economy. But if you can find a solution to their problems, they will be willing to pay your money to do that. And if you can solve more significant issues during this time, you can make more money. When the 2020 pandemic hit, you saw people sitting at home watching Netflix and sitting on YouTube. Most people become content creators nowadays because they are not allowed to go out. Now you do not have to go out. So now you had this whole new wave of people who started earning an income from their homes because they started becoming YouTubers, TikTokers, and Instagrammers. It is like when one person spends, it becomes another anticipated income. Instead of hanging your head in defeat, you must decide that this is the time to double down by working cleverly and more challenging. Look at this as an opportunity to leapfrog over your competition. Think of ways to reduce your prices and offer even better products. So, when the good times come back, you will be ready. Have you got a ton of value? Do not forget to subscribe, like, and share it with your family and closest friends who needs to hear this video.